free. So for those of you joining us for the first time, welcome. If you're joining us for multiple times, hey, I appreciate the support. And we wouldn't mind if you tossed a few of your friends a link from time to time. That would be great. Thank you very much. So it is the 8th of September, the day after Labor Day 2020, and I am that guy, John Najarian. 3 at 3, presented every business day at 3 p.m. Eastern Time. Our disclaimer is very short and sweet. This is for information and educational purposes only. Intellectual property rights, yes, we have copyrights, we have trademarks, we have registered marks, and we have patents on much of what you're about to see here. So please, before you use it, please ask us. We'd be happy to let you do that, especially if you're citing marketrebellion.com. All right, SoftBank. I think if you saw the halftime report today, you know why I'm talking about SoftBank, because many folks have been writing about and or talking about this. My friend Zero Hedge, and yes, I say friend, I know the guys, plural, at Zero Hedge. I've had dinner with one of them, and it's an interesting crew. And they are some of the folks that reached out to me last week when I first started talking about this big SoftBank trade. Now, I didn't break this story, folks, and I said at the time that I don't know that it's SoftBank. Turns out, now the Wall Street Journal, as well as CNBC and others, Business Insider, have cited SoftBank as the NASDAQ whale. But I want to point out that regardless of who the buyer is, we don't know if they are losing money or if they made money month after month after month after month and then lost on a trade here, because we all do that. All of us have great trades, and I like to, bang, cheer those trades on. And then all of us have trades that don't work out so well. So we're not certain, and the reason I show you this graph is they say this has been going on since March. That when you look at that trade and you see Netflix, Microsoft, and so forth, Amazon, you see how the call option bets, because that's what these were, bets to the upside on calls, whether they have paid off. And I think most of you know that if you had been long in calls, a leveraged bet to the upside of a stock, and you'd been doing that since March, you probably made a lot of money. Now, this wasn't one trade that was put on in March and held till now. These were bets over and over again, probably in the 1 week to 1 month time frame. And I want to show you guys what that means to a trader, which is what I used to be on the trading floor, and call it the tail wagging the dog. Because when you put an outsized bet into the market, what are you doing? Well, somebody has to accommodate you. If you're buying $5 billion worth of derivatives, you're not just slamming it in through an online broker. Trust me, you're not doing that. Nobody does that. So instead, you're calling a trading desk, and that trading desk is making a market for you. So the trading desk that provided the leverage didn't just put it on and say, okay, I hope this works out. I hope, I'm going to pray. No. If they sold $5 billion worth of upside, which is what the articles say they did, if they did that, they hedged it. Now, let's, for the sake of argument, say that that was a 30 delta call option that was purchased. 30 deltas meaning it's an out-of-the-money option. It's not in the money. It's not at the money. That would be 50% or 50 deltas. It's out of the money. So I'm going to say these were probably 20 or 30 delta calls. If they were that, then let's say that you have a stock that somebody decides, for whatever reason, I want a big upside bet on this stock. I'm going to buy the derivatives from you, the dealer. Okay, sold. At the right price, we will all sell. And then as the stock starts to rise, I've got to chase it, being the guy that provided that upside call. I have to chase into the stock and buy more and more of the stock as it's rising. I am in effect throwing gasoline on that fire. So with that said, here's an example. Let's say that this trader who they've called SoftBank buys 50,000 Microsoft June 185 calls when they were trading for $2.50 in May. And the stock was $10 under that, was 175. Now that would probably be a 20 delta call or so. But for the sake of this example, let's just say the trading desk that sold these 5 million share equivalent, because that's what 50,000 options is, they want to hedge some of that right away. So they buy 1.5 million. If it's 30 delta, 0.3 times 5 million, they need to get 1.5 million shares against these options that they've sold, because the options obligate the seller, the trading desk in this case, to deliver shares at the strike price, in this case 185. So as the shares run up, the trading desk needs to buy more and more and more as the stock's going up. So they go from being long 1.5 million shares to being long 2 million shares to being long 2.5 million shares when Microsoft trades 185. Because as I said, an at-the-money option is about 50 deltas. So that means that if we run up to 185, I've got to have 2.5 million shares against the 5 million shares that I've obligated myself to deliver at 185. That would be delta neutral. Now, in such a case, SoftBank would have made millions on those calls going up in value, and the firm providing that upside bet would have had to keep buying, hedging, exposure to the upside of Microsoft. So they're committing more and more capital into that trade. Now, obviously, as it rose $10, the 1.5 million shares that they purchased at the beginning has made $10 times 1.5 million on that rise. That's the good news. The bad news is that those call options are now worth a lot more money than they were when they sold them. So this is cutting into not just profits, but probably cutting into and hurting the player who provided this upside call exposure. And so what I want you to consider is it could be that SoftBank made money, and then had a losing trade like this and lost money because last Thursday the market broke down. Or it could be SoftBank made money, lost money, made money, lost money, made money, and then the market broke, and the people that provided the upside speculative paper for SoftBank were the big losers on the way down because they're long 2.5 million shares of Microsoft, for instance, and the stock is breaking down, and they're selling to get out of it. So in other words, SoftBank may have been the catalyst for this trade, but they also might be the very people that caused the trading desks to get hurt as it broke to the downside. You guys decide. I think time will tell, but I don't think the story's completely written yet. All right, you like to learn more about trading? Well, come on over to marketrebellion.com/get started. That is marketrebellion.com/get started. We can show you all about trading and what it means to own a stock, to own derivatives, to own cryptocurrencies or futures. We can do all that over at marketrebellion.com/get started. Speaking of which, let's get started with today's presentation. DraftKings, because not even an hour ago we saw unusual activity in DraftKings. Stock was $37.67, as you see on the screen there, right in the middle. And somebody bought 5,000 of the regular September expiration, not this week expiration, but regular September expiration, almost 2 weeks into the future, 40 calls. And they paid $1.59, which is $159, because every option is for 100 shares of stock. They paid $159 to $170 for these. And then they sold the 4150 calls against it for basically about $119. So if you net those two, what you paid $159, what you collected $119, you see that they've only put 40 cents on the table for something that can go to $1.50. Put another way, they've put $40 on the table for something that could go to $150. In other words, they could have a triple on this trade. That's worth noting. All right, I joined them. I did a lower strike, but let's take a look at where it is now, 37.05 for DraftKings. Let's get to the second of our 3 at 3. GLD. Why? Because at 179, as you see here, I noted for them 12,000. That's 1.2 million share equivalent of the 175s that expire at the end of this month, the end of September. Now, what happens at the end of September? Let me see. Oh, that's the end of the quarter. Because October, November, December, that's the final quarter. This is the end of the third quarter trade. It's the September 30th, 175 calls. They are almost $5 in the money. They're $4.62 in the money. You see why that is? The right to buy it at 175 would be worth $4.62 with the stock trading, or the ETF, trading at 179.62. There is the stock. Now it's 181.38. In other words, it's already worked a little bit. Let's say 70 cents, 75 cents to the upside from where we first saw the activity. People are betting that by the end of September, maybe we see a little push higher, and the strike price they bet on was in the money. That means they want a surrogate for the stock, a surrogate for owning GLD. All right, let's get to our third of our 3 at 3, and I've got a bonus for you. Third of our 3 at 3 is AGNC. What is this? This is a REIT, folks. AGNC. Let's see where we're trading right now. AGNC. Do I still have? Yep, still have it. September 14 calls that expire this coming Friday. Note how many traded. 2,700 traded. 2,700 for 5 cents to 14 cents. So call it 10 cents if you want. Call it 14 cents if you want. They traded the right to buy it at 14, which was at the money. Strike price is right where the stock was. There you see that the volume moved up to 15,000, not 2,700, moved up to 15,000 of those at the 14 strike. Somebody thinks something's going on in here. And there's the stock as it traded on the highs today. It hit 14.42. It is now 20 cents lower than that, but still up 2.6%. And it's a bet on a REIT. Watch that one. I've got a bonus for you. The third of our 3 at 3 right now, AMD. We saw the September 77 puts trading for $1.26. That's $126 if the stock stays above 77. What would your break even be? 77 minus $1.26, which would be approximately not 76, but 75 and 74 cents. 75.74 would be your downside break even. That's nearly $5 lower than where the stock is right there. It's probably why the trader elected to sell those. So this is a put seller. They sold 3,000 of these for $1.26. There you see the stock breaking down to 79, and you make money as long as the stock stays above 77 at expiration. Could drop below that, and that's your obligation, as I said on the halftime report. Those are weeklies, the 11th of September. That's deep end of the pool stuff, folks. You are obligated to buy stock if you sell a put. So now you've seen all 4 of our 3 at 3. We had DraftKings, we had AMD, we had AGNC, and we had AMD. Whoops, where was that? GLD, sorry, GLD. Already hit AMC. Thank you, folks, for your time today. I hope the explanation about what's going on with SoftBank helped a little bit, and I hope you have good fortune trading any of the stocks that I might outline here, but keep in mind, it's for educational and informational purposes only. Thank you for joining me today. I hope you have a great day, and I'll see you back here tomorrow on Market Rebellion Television. Bang.